Thank you for tuning in. Hopefully this will bring value to your investing and trading process in the stock market. If we bring value to your process, please show us some love and subscribe, like, hit the bell. And be careful. This is a very risky business. It's a very tough industry. So let's get into the charts.
Okay, here we are. We're looking at Amazon, but before we do that, let's get this guy out of the way. All right, so it's March 22nd, 2024. Amazon. We all know who Amazon is, and I probably have something on my front porch right now waiting for me. Okay, so they're currently trading at $179 and change. What we want to look at right now is the current market cap is 1.85 trillion. That is huge. So they're a global company, and when companies get this big, it's really challenging them to grow at that exponential pace that they once did several years ago. So going forward, it can be a great company. They can dominate the world. It's probably going to be a slower growth scenario. Well, let's take a look at some of the earnings. So we have a forward PE of 42.19. The trailing PE is 61.44. The 52-week low is 96.29. The 52-week high is 181.42. That seems pretty substantial for 1 year. But we're going to look at the charts. Okay, we're looking at Amazon, March 22nd, 2024. The current price of the stock is $178.92. That's the top of the range. So the 52-week low was 96.29. The 52-week high is 181.42. So these averages are very important. As you can see on the stock's last gap up, it gapped up through this area right here. The actual earnings, the estimate was 80 cents. The actual earnings was $1 per share. So they beat the street and they got rewarded for it. They gapped up the following day from the earnings. The volume increased to 117 million. So the average volume was in the 45 million per day range. And then on this particular day, the next day after earnings, it gapped up to 117 million. So financial institutions, they have limitations on how much they're allowed to buy. So they can't just go all in and put everything out there. They have to buy in blocks. So this keeps everything in check as much as possible as far as for the ranges and these parabolic moves that happen. So what happens when you see a big gap up on substantially higher volume, that's several of the institutions are all buying in and moving the price of this stock a lot higher. So what happens is they're going to have buy points for their limitations and their time period. So as the time goes on, they're going to be buying more and then buying more, and this is just going to keep pushing the stock higher and higher. So what we can do as investors or as traders is follow the money. We don't have to try to figure out all the nuances and the intricacies of the order flow, and you can dissect this thing 100 million different ways. You can dissect the market if you just follow the big money, follow the big volume, and then manage your risk. You need to manage your risk. You need to put your stops in if you're trading. Now, let's say we wanted to trade this on a short-term basis. We can look at the 10 or the 21 day as where it's hanging out as buy points, and then you put your stop in immediately after you purchase the stock, a little bit below the 10 or the 21 day moving average, depending on where those numbers fall into place. The other is the 50-day moving average. So if you wanted to put a stop in at the 50-day, you're going to have a level of support. As you see, the 50-day is also a level of support down here at 167.33. And that will complete our analysis. Thank you and Have a great day.
Thank you for tuning in. So please be careful when investing and trading in the stock market. It's very risky. All the information is very time sensitive. So I hope this video brings value to your process. If we do, please show us some love and subscribe, like, hit the bell. So please remember to dot your I's, cross your T's, and don't forget the Z. Happy investing.